Hey, good morning, everybody. ¿Cómo allez-vous? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. Hello! I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. I appreciate you. You are special. Your mother was right. I'm here at 7:30 in the morning, Monday through Friday, here at Forex.Today. Thank you, Forex.Today, for hosting us. Thank you all for posting your trade plans every day, creating this community that we have. These sessions are really designed for me to teach you through real-world experience how to be a successful Forex trader. Technical analysis, fundamental analysis, trader psychology, global macroeconomics, the way the world works, whatever. I am here for you every single day. Thank you for being a client of TradersWay. We appreciate you. If you have not joined the family yet, please do. Visit TradersWay.com, open up a demo account. It takes 30 seconds. You'll find our execution speeds faster than most. Our spreads are very competitive, and we have world-class customer service. And we don't mess around with your trades. What a dream. What a dream. Yeah, Ron, so yeah, thank you. Ron sent cigars. Thank you. Oh, I don't have charts loaded. Hang on, let me load charts. I'm saving up. I'm going to save up. Where's my share my screen? I want to get something like extra special, redonkulously, you know. I don't know. Maybe not one cigar, but you know, let's say. I mean, sometimes they come in boxes of 10 or 20 or something. But I just want to get something like ridiculous. You know, they're like, this box of cars comes with this yellow Lamborghini as a bonus. And you're like, oh, really? So I don't know, but I really appreciate it. So thank you for contributing to the cigar fund of Chateau de McDonell. But it's always appreciated. That's not the cigars, it's just early in the morning. So thank you, appreciate that. I am learning that foreigners are not able to send the virtual cigar. I don't know why apparently they reject foreign credit cards. Like, really? Stupid Americans. So they have a website and apparently they can't accept foreign credit cards? Really? I mean, I've never heard of that. But it must have to do with tobacco and the stupid government not allowing it or something. So if you're a foreigner and you want to contribute to Wayne's super ridiculous cigar fund, just PayPal it. That's probably the easiest. Yeah, isn't that funny, Ron? Right? We don't like foreign money. It's dirty. Yeah, Stuart says they must do an age-based check or something. So I don't know. So. Yeah, cool. So, good stuff. I'm slow today. I don't know why. Yeah, I love foreign money, Mike. I'm like, I got laid in all over here. I just saw I have some sitting under my desk. It's pretty, actually. China is quite pretty in places. No. I'm like, oh, Is that sitting under my desk? Saw a box full of Monties. Nice. Grabbed a few. Very nice. I don't know. I don't know if this is an old one or not. I was in China a long time ago too. I don't know. Oh, you got the number 4? That's nice. I think the number 2 is perfect cigar. All right. I guess we have to start. Sorry. So I'm really slow today. I don't know why. I have no excuse. Okay. Pound dollar. Off resistance. Down into support. So it fell at resistance and bounced at support. Yeah, I don't know anything about that, James. So isn't that neat? So support held, resistance held, and you kind of need to expect that. A couple of things I mentioned yesterday, and I don't know if you caught it. If you've done the swing trading course, you know it, but it never hurts to repeat it. When the market opens outside of a normal swing range, for example, it opens above the weekly M3, it's not a great place to buy, and it certainly is a terrible place to sell. The way that you play it is off moving averages. I don't know if you know that. First the 5 and then the 21 is what you're trading up. And the other part that you're playing is a counter trend. If it hits the target, so I don't know if you count that as hitting the target, but if it hits the target early in the week, I think it's a rule of 72. It should return back to the central. Okay. So it's weird though because it's a half week and all that kind of stuff. It's Thursday already, isn't it? January 4th, Thursday. So we have ADP today. Must be ADP day. Yeah, in 13 minutes. No. Give me at 13 minutes and 30 minutes, dude. So you can kind of see I'm still treating my life like a holiday a little bit. Well, it's only because my family went home and my kids are back in school. Now it's a holiday. In my opinion, right? Need some spicy crab soup. So anyways, I don't know how to treat this. I guess we're just going to set up for NFP tomorrow. Remember, I do NFP tomorrow at fxstreet.com. I believe the May session. I believe the May session is the 12th year anniversary of that. So we're getting close. Euro dollar, US weakness. Okay, we are in a danger zone though. Well, you know what else it is today? Today is the 25th anniversary of Bloomberg Radio. Huh. It's interesting. But so looking at this euro dollar, it's in a bit of a trend, I would say. And this would be a terrible place to start buying. So, yeah, Ryan, that's cool. He's great. I sort of shared a stage with Tom Keene once. I was getting on stage to speak, and he was getting off stage to speak. He's a big dude. That's all I remember. I'm like, dude, that guy's a big dude. It's big. But, you know, he went with his minions, and I went with my minions, and we passed. Yeah. But he's great. He's a great moderator. So off we go. Look at it. Blah, 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 blah. So terrible place to buy. And if you're a bear, you're looking for some sort of sign to roll over. Now, this is a pretty big uptrend. So if you were thinking of waiting for it to reverse and head down, okay, if that's what you're looking for, piece of advice, if I can get my drawing tool here. All right. You'll get a situation like this, and then that's going to create something like this, and then it's going to go down, then it'll come back up, and then it'll come back down. Okay? Yeah, it could be, right? But the reason I say that is it needs to reverse on every time frame, right? So you need reversal patterns on all of these things. And the basic definition of a reversal on this time frame, so this is a 4-hour, you kind of have to wait for the 21.55 to cross, right? Well, how long is that going to take on this 4-hour chart? A while, right? Yes, what's going to happen today. So I'm just saying, you know, don't be too aggressive. Don't be irrational about it. Just, you know, realize it's going to take a few chops before the log splits, right? And then, of course, if it's going to run, be careful. I mean, I don't know. You kind of you need other people to do this for you, right? So just relax, bro. Relax. And find maybe something better to trade. Now, I've been telling you, even though Europe seems to be in a shambles, I've been telling you it's the better currency at the moment. So you might as well be selling like pound dollar, or right, versus euro dollar. Now, Ryan says buying at the 21 if that resistance is dangerous. Absolutely, unless you're scalping. Okay? So you do something like, let's go back to that. First of all, you recognize it's a 21, and you recognize it's a pivot point, and you're already a bull. And bulls are looking for like roll reversals and stuff. So you're eyeballing this, you're looking for fib retracements, you're looking at the 4-hour 21. You're looking at the pivot, and because you're gosh darn so bullish, you just believe we're going to blow through that resistance, the gray zone, right? The resistance based on previous highs, okay? So the way you do it is you would want to buy down there, but you'd want to enter on a smaller time frame, okay? Then what? Then you need your reversal pattern, right? So you could do that, right? Call that a J-low. Kenny says, means the 4 hours the only reliable? No. They're all reliable. I've never seen a chart lie. Unless it's a misquote or misprint or a glitch on the server, but there's no glitches in the matrix, right? They're all correct. So it comes down to your trade plan and your bias. Okay, Kenny? So if you were already a bull and you were already looking to buy, and those are the keys. It's all about you. It has nothing about the charts and which time frame is more reliable than the other. They're all reliable. They're equally reliable. But if you already saw this as a 4-hour 21, and you said, that's a dynamic level of support in which I need to buy. That's straight up, basic stuff, right? And then you say to yourself, well, I think this pivot's going to act like a support too. So I believe this area is a confluence. Okay? Then you on this time frame, then you would probably even channel this. And you're looking for things like break out of the channel, retest, and you're long and gone. Okay? And on a 15-minute chart or even a 5-minute chart, if you're actively trading this, there's plenty of room to manage the risk of this whole zone being potentially resistance. Okay? There's tons of room to manage that. I wouldn't buy it and walk away, but if you're day trading, shoot, bro, what's most important? You're buying at support in an uptrend. Did you hit the pivot profit zone for the week? No. Did you hit the pivot profit zone for the month? No. So you can totally do it. Okay? But you just got to actively manage it. I wouldn't buy and walk away kind of stuff, right? That would be more of the concern up in here. Okay. Call it magic. Call it good. Okay. So that's all. No, if you weren't aggressive, you were not bullish, and all that kind of stuff, then that doesn't exist. USD CAD. Amazing how far it fell, huh? The only thing I could say about this is at the time it was very, very bullish. Remember that? We were just very patient about the whole thing. Let it come around, let it come around. It was still rallying in the range, still come around. And then there I'm like, look, I'm bullish to neutral on oil, which means I'm bearish to neutral on this pair. And then we set it up from, I think, this touch. We waited a couple of days, and then this was the key, and then there was little micro entries, more of a macro entry. It just was trade planning. Still don't know where it's going to go. So 2.5 weeks ago, I did a big stink about the return of global macroeconomics, probably some rally in commodity currencies, and I think collapse in the US dollar, right? Remember that whole speech? What was the There was a day where I said I got a report from the US government on the history of some type of commodity. What was that report about? Yes, heating oil. So I talked about that for about 20 minutes. What did I talk about? It's pretty specific stuff. This was probably the week before Christmas. Demand increasing due to lower temperatures in specific states, like New York and Boston, right? Was it that specific? Based on that data, that could create demand by the refineries for West Texas Intermediate so that they could make more heating oil and presumably not gas too, right? And replenish their stockpiles, right? So it's not even really seasonality. It's really like you have a normal amount of heating oil on hand because, well, this is what you do. You make product and deliver it to a market when there's demand, right? It's the same thing as like making Bart Simpson t-shirts or something. They make products. They buy West Texas Intermediate and they refine it and make products out of it. Everything from petroleum used in your car to petroleum used on your lips. You frack and crack. You crack nat gas and make fertilizer, right? And you pour West Texas Intermediate into a big furnace, and the tar falls to the bottom, and the jet fuel goes to the top, and you siphon it out, right? Great. So you have normal amounts of product on hand to sell. Well, if you get a lot of buyers of heating oil suddenly, you're just going to have to replenish those stocks. That's what I was talking about a couple of weeks ago. So that may be one of the reasons why demand for West Texas Intermediate seems to have gone up, or at least price, over the last few days. So that was a couple of weeks ago, wasn't it? So we were having that conversation in here. It was either there or here. And right now, the last couple of days, if you live in New York City or Boston, even Philadelphia, I think, from Philadelphia to Boston, these are like big financial centers. Philadelphia used to be a really big financial center. If you ever watched Trading Places with Dan Aykroyd and Eddie Murphy, that's Philadelphia, where the Duke and Duke. Okay. So anyways, from Philadelphia to Boston, they're getting cold weather, they're getting deep snow, and they're getting high winds. It's cold. It's cold in Illinois and Michigan, right? It snowed in Tallahassee, Florida, the capital of Florida. It snowed. With the sun rising, I might be able to, can't really get it, but even my lake is freezing. My lake doesn't freeze that often, so it's just been cold every day for about a week or so. So the shallow areas of the lake are starting to freeze on top. So, I mean, it's cold, right? So that might be a reason for the demand here. Notice that typically this Stokes cycle, I call it a Stokes kicker, right? Off of a 21 can take us even to the next level. Okay? And if that continues, obviously Canada will benefit because the United States does import oil from Canada. Wild, right? So we might be heading really 62.5 to 63.5. But I think I said that already. But cool how it does come together, right? Right? We did talk about that, right? I was reading reports, and then I did share it with you that this could happen, that you need to watch the weather reports in specific areas where heating oil is used more than other areas, and that if there's a cold snap, you're going to see high oil prices. Well, there you go. Cool, right? And another example of that, I think, let me do this, hang on. Yeah, here it is. I used to do weekly TV news remotely from my office. This is me in 2006 or 7. I'm a little bit older now, okay? So back in 2006, 2007. And this is just me talking to the camera. You can see, you know, and yeah, this was for, it was called Forex TV. Okay. So, you know, obviously I'm talking about my avatar at the top left there. Can you see that I have maps, including weather maps behind me, as well as my charts? Right? Am I watching? So there's the off the coast of Florida. Is that China? Do I have China? I'm having China back there. What am I doing? Oops. No, oh, I messed this whole thing up. Yeah. What was I doing there? I was watching something. So, you know, this is what, 10 years ago? It's like 10 years ago. And I was correlating real-time weather patterns with commodity prices. Right? Chasing twisters, yeah. But it's interesting though, right? Like, I hope, if anything, I've planted a small seed. There is a relationship between supply and demand. Hurricanes can cut off supply, but also increase demand. And back then I would have told you, you know, if the hurricane is coming in, you know, below, let's say, the DR, below Dominican Republic, below Cuba, you know, you should do all kinds of things. Buy frozen concentrated orange juice futures, buy Home Depot and Lowe's stock. And you want to do it before the Weather Channel and CNN and everybody's out there on the beach with their fake news of people throwing stuff at them, the fan on. It's so windy out here, it's crazy, right? Yeah. But once it hits TV, the trade's over. You need to jam your stop at break even and let all the, you know, the idiots jump in, because they're the ones that give you the profit. Yeah. So interesting stuff is all I'm saying. That we did talk about it two and a half weeks ago, to watch weather and watch oil prices. And it was really yesterday and the day before that New Yorkers were starting to prepare, right? So it already hit the news kind of thing. So you could have been earlier in on this before anybody else. Okay. Sean, if they're on payroll, then yeah, because ADP is a payroll company. So if ADP prints a payroll stub, they're going to count it. But, you know, the government, when they do the establishment survey and the household survey, they're very specific surveys, right? Because there is no non-farm payrolls, right? It's the employment situation report, and that's two different reports. And together you try to get some sort of sense of what's going on, but it's really from that fuzzy logic and, you know, math magic, right? But when the household survey takes place, someone knocks on the door, and Maria answers. The person says, "All right, how many people in this household have a job?" Right, and they're gathering that kind of information. Maria says, "Well, I have 3 part-time jobs." So you work? Well, it doesn't tell you a lot. First of all, she doesn't have full-time employment. She has 3 part-times. So she may be underemployed. She's not receiving benefits because she's got 3 temp jobs and all that kind of stuff. And there's a lot of other data that could be very relevant and important. And the worker says, "All right, good, so you have a job, smell you later." And off they go. If she doesn't have a job, are you looking for a job? Right? So you could not have a job and not be counted. So for much of the, the improvement in the unemployment rate of the United States, how it was 10% and then it dropped very quickly to 5% and then even lower than that. Well, a lot of it was just people not even looking for work anymore. So that's why we've gotten to a certain place where we're floating, and no matter what happens, the unemployment rate is not changing as much as it used to. Does anybody know the 3 different types of unemployment? Oh. Right. And I thought you were a macroeconomist. Okay. Mr. C says, frictional, cyclical, and structural. Great. So what's full employment, Sean? What's the natural rate of unemployment? Frictional means you decided your boss is a loser and you told him to take this job and shove it. So you just walk out and you look for another job. And you fairly easily get it. That's frictional. Cyclical means that it's related to the boom and bust of the general economy, right? The stock market crashes, people start hoarding their cash, people stop spending, you lose your job, but then, prices start falling, like the prices of, empty brand new houses, they start falling, and, people start coming in and buying those that were not around before. And then all of a sudden things start improving again, and credit starts flowing again, and people get their jobs. And it's a big boom and bust cycle. That's how capitalism works. Why the government's afraid of it is stupid. And much of our problems, in my humble opinion, have to do with this idea that the government should fix the business cycle. Well, I guess if you fix this whole idea of the sun rising and setting every day, we can improve crop yields. But why would you focus on trying to keep the sun from setting every day, right? I mean, it's weird stuff. But then you get this structural idea, and that's the bad stuff. And that's where your coal miner loses a job and isn't qualified to do anything else. Okay? So now you got like retraining and stuff, and that ain't easy. So you have your natural rate of unemployment where there are reasonable levels of frictional and cyclical. So very often if you were taking a test, they'll try to trick you and say, you know, the goal of the Federal Reserve is to, you know, ensure that there's no unemployment. Well, that's not true. There's full unemployment. Full unemployment includes frictional and cyclical unemployment, but not structural. Structural is a whole different problem. Yeah, full employment includes normal things like boom and bust of the general economy. That's normal. You quitting your job and then getting a better one down the street. That's new. Oh, is it 8:15 already? Yeah, okay. 250 versus 190. Cool. Nice. Great. Woo. So ADP would be similar to the establishment survey of the employment situation reports. And what they do is they go into a business and they say, let us see your employment stubs. Yeah, right, says 4.1 must be, you know, close to full employment. Yeah, you'd stink, but what if there were 20 million people that haven't looked for a job in 6 months? And suddenly they're like, all right, wages are up, all my friends are getting job offers that are paying like good money, and they're getting good jobs now, not just filler jobs. So you're like, you know what, I'm going to get off my butt and get a job because there's good jobs and they pay well. So all of a sudden these people start showing up, and that drives the unemployment rate, right? Because now they're looking, but they don't have a job, but they're in the workforce. So then, you know, so those calculations are based on, you know, the workforce. Well, what's the workforce? Not the population. It's not retired people. It's not old people. It's, right? It doesn't even include, you have to subtract military personnel. Then you have to subtract people with jobs, right? And then you have to subtract people that don't have a job, don't want a job, not looking for a job, not capable of a job. Right? And then you're down with how many people are looking for a job but can't get a job, 4.1%. Of all those, right? And all of a sudden you're like, well, that's not counting a lot of people. But by design, if you're not in the workforce, you're not counting. So again, if you were in a class, they would tell you the general population, they would tell you the number of unemployed, they would tell you, maybe give you some of the numbers, and then you'd have to base that, and then start doing some calculations to figure out the actual unemployment, right? So you'd have to derive, well, what's the natural unemployment rate, what's the total population, and then how many are working, and then if you have how many are not working but looking for a job, you can figure out, well, then there's going to be those are not in the workforce, and then those that are in the workforce, so you have to be able to define that first, and then go back, plug that number in, get the next number, and then you can break it all down. Don't you love school? Isn't school great? Take an easy concept and make it incredibly detailed and incredibly intensive. Well, there is an increase in wages. But then also, Ryan, then you got to say, well, nominal wages or real wages? Okay. But I believe wages are going up in the United States. Real wages. Not by much, but they're not going down. So I think that's trough is already happening. And that was one of the things that made me feel better about the U.S. economy. About a year ago, it was bottoming out, where wages were not falling. Productivity was low. There was still, we were pretty close to full employment, or we were at full employment a year ago. And so the wages were just like going from this downward trend. I guess we got to do backwards for you, right? This downward trend, and it was sort of like this, and just so. Okay, when you invest and when you trade, you need to think about the future. Okay, if you're only day trading, you get caught in this stuff where you're trading the noise, which is fine. But if you're more of a let your winners run type person, right? You kind of have to think next month, next quarter, later in the year, next year, that kind of stuff. And it's the trough change where you start to need I call it tiptoeing, right? You need to start tiptoeing into the idea that maybe a bottom's been printed, right? And you need to shift, and we have. It's in these moments, I have long conversations with you. 45 minutes out of the hour and a half I'll spend just talking about, well, what if we're in this area? What if things are not going to get worse? What if what if things are just slowly going to get better and improve? Well, then we need to change our thinking, right? Yeah, it might have been what Aussie was a great one in the sense that we were talking about that quite a long time ago when Australia was falling. Do you remember, like, the Aussie dollar was falling? And I said, I think we need to be open-minded to start buying this thing. And then we started talking about their trading numbers. We're starting to improve, right? The worst of China seemed to have passed, and yet the Aussie dollar was still falling, right? So I don't remember where that was. Price is back when we're approaching 75, but that's way down in here. Okay. I do know that when we were down here, I was preparing you for buying yen pairs in the third week of August. And that is here. Spent months preparing for that, to buy it. Not here though, here, the third week. Okay. Here's the, oops, that terribly crooked line, but here's the third week of August. Now this one only went up that much, but this one went up that much, so I don't know. Yeah, the Trump trade threw everything off. But whatever. My point though is that you need to think big. I mean, if you want to be the professional that sits down and explains global macroeconomics to clients, you can say, well, we're here now. We used to be in a path then. And based on then and now, if you take that trajectory, we should be over here someday. And along this new path, there will be winners and losers. And we need to talk about, how we can take advantage of this rate. Like, it's a moving target. And everything that's being sold to you now, ma'am or sir, is based on what has just happened. Right? So what's happened, right? I don't think you should be buying Bitcoin at 20,000. I'm sorry. So great. But are you interested in Bitcoin? Then we can talk about that, right? Whatever. We can talk about that. But where are we going to be in 5 years, for example? And what's going to happen over that time? What's going to happen in Europe? What's going to happen in the UK? So on and so forth, right? Okay. What's going to happen when China purposely slows its economy down so that it can implement reform? Have you thought about that? I planted that seed probably in November. Okay. Should as factors come back to the U.S. and probably South America? Well, you're going to have to make your decisions and then back that up with facts, right? But Latin America needs to get rid of their socialism. I read a great case study. I think it was El Salvador doing business with Honduras. Does that even make sense? Are there border countries? I don't think it was Nicaragua. I thought it was El Salvador. But anyways, I read this where there was a period in time where the government decided, well, it needs to protect all its own products that it makes in its own countries and not import from its neighboring countries. It wanted to protect, right? So it spent a lot of money building its own factories. Like, for example, the hot sauce that everyone used there wasn't actually from their country. They imported it. So the government said, well, we need to stop this. We should stop importing this hot sauce. So we'll spend like $1 billion building our own hot sauce plant, right? And they started doing this throughout the economy to basically close their borders and started, because it makes sense, right? Well, we'll make our own hot sauce and then the money stays within. So look at what happened to Latin America after doing that for 20 years. They have factories that are not making hot sauce and their economies suck. And they're trying to attract cruise ships into Honduras, right? Building a Senor Frogs and giving tourists margaritas and tacos in frickin' Honduras. It's not Mexico, right? I mean, it's a crying shame. But that socialist idea of protecting all the workers and closing all the borders and we'll do it all ourselves doesn't work. So there's still remnants of that. But I don't blame Latin America, because go back a couple of hundred years, right? The Europeans were raping and pillaging all of Latin America. And then they get kicked out because of the good old Americans. So the Americans came in and raped and pillaged. And they kicked the Americans out. So the Russians showed up with the Cubans' help, because the Cubans speak Spanish, right? Boom! Raped and pillaged everything. And did things like, great, so what's left, right? Well, we'll do it all ourselves. So they build the walls and build their own factories, make their own hot sauce, and drive the economy absolutely down into zero. The world needs to embrace capitalism and stop messing with it at the government level. There's going to be booms and busts. So how do you survive the booms and busts? When you have a lot of money, save it. Remember that? When you're filthy, stinking rich? Save your money. Remember those days? Yeah, I'd like that TV, but I don't really need it. I should put my money into the retirement account. Yeah. Remember those days? Your great-grandfather who lived through the Depression? Those were the days. So anyways, where are we now? What's going on? Oh yeah. So, long-term view. Think about it, right? And most of my ideas start with very simple premises. Are things getting worse, or are things getting better? But that's how money works. What more do we need? Okay? So whenever it was, when we're talking, I thought it was more recently, like, what date did the trade balance numbers from Australia go from a trade deficit to a trade surplus? Because we talked about Aussie dollar was falling in value, but I'm like, whoa, that data is improving. And even though the Aussie dollar is falling, it's going the wrong way. Oh, I say on Aussie dollar. Okay. Oh, was it there? This area? Let me zoom in now. All right. I thought it was more like May that we were having that conversation. I think it was more like this one. It wasn't that recent. But anyways, right? So you have to start with your basic premise. Like if we did like the, capital raising boot camp in South Africa, I'd ask you right away, pitch me your idea. And you're like, well, what? Yeah, pitch me your idea. Well, here's my track. No, I didn't ask for your track record, yo. If I gave you $10 million, what are you going to do with it? I'm going to do the best I can? I mean, come on. Right? We'd have to talk about that. What's your sellable idea? What's your bias? What's going to happen in the next 1 year, next 5 years? How are you going to take advantage of it? See, if your alpha's got to be based on being smarter than everybody else, or at least being more right than everybody else in the world. And that's where, the bigger picture stuff is going to be very, very important. Cool. So, whatever. La 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 la. Do we finish all this? So I got busted out of I think every yen pair yesterday. Luckily my stop was at break even. So what's going on here? Oh yeah, and I added a second Turkish lira short, I think in here, and I got knocked out. So that's too bad. But I do have permission now to move my stop. Check that out. I can now move it to protect 6,000 pips. Yeah! 6,000 pips! Boom! Yeah, locked in 6,000 pips. Greatest ever, dude. Greatest freaking trader ever. Don't you love trading Turkish lira? Yeah, I had like a 2,000 pip stop yesterday. How funny, huh? How funny. So, yeah, so that's a bummer. So, a lower low, lower high. We'll have to see how it goes. I might not do anything with NFP around the corner. Joe says, how can an average guy like me be smarter than everybody else? First of all, everybody else is below average. Now, everybody thinks they're above average. Ask anybody, they're above average. In my opinion, everybody's below average. So there's a bit of confusion, right? Most people do not even try to think ahead. It's so much easier to just play Forex like a video game. Green arrow, red arrow, But no, I think you can do some basic, you educate yourself, right? You could do some basic things to give you a general idea, an opinion, right? And once you have an opinion, then it tells you or dictates how you trade. For example, is the dollar going to strengthen or weaken in the next year? Well, that will determine whether you're buying dollars or selling dollars. Well, if you're buying dollars, you're buying at support. If you're selling dollars, you're selling at resistance. It's pretty simple once you get that done, right? Most people don't go that far, which means the basis of their trading is a whim. Okay? And by the way, you don't have to be smarter than everybody else, really. What you need is a track record of success, an opinion that's tradable, and other people's money. That's all you need. And you can just have your own little trading business. You don't have to be the world's greatest. You shouldn't be the world's worst. But it's just a little business. Right? Then you need to go out and raise some more money to have more assets under management. You kind of do the same thing, but now you're trading bigger money and you make bigger returns. And it's just a small business of yours. So what do? Well, I'm a currency trader. Right? Right? That's all. I mean, you should really look at Forex as a lifestyle, and I've tried to share that with you over the years. But you just take it with you, and it's what you do, and it's interesting work. You're always thinking, you're always reading, and you're always pondering, and there's a little bit of trading. Right? All right, so anyways, Mexican peso fell again yesterday. USD Mexican peso fell yesterday. Just amazing, huh? How we can call it weeks in advance and then days in advance and then even really basically hours. Like, well, tomorrow we should probably look to start buying selling USD Mexican peso, even though it's been up for 3.5 weeks straight. And then, like clockwork, down. Love that. So that worked out. Turkish lira is still working out. I figured it out. These are small numbers, but I'm not trying to make a big statement about money. Money is easy. What was I supposed to do? Oh yeah, I have to do this calculate. Calculate. Okay. So you get paid, one of the benefits of Forex is you get paid interest 7 days a week. It's not like you have to wait for a coupon payment to come in 4 times a year. Okay? One mini lot, right, of USD Turkish lira. I think one mini lot cost me $80. I don't think I'm far off there. I don't know if it's 120, but I think it's 80-ish. But anyways, I think it's about 80. I looked it up, and I'm earning 71 cents a day on my $80 investment. Okay? So 0.71 cents every day, 7 days a week. So what happens is you get paid 3 times on Wednesday, because there's 2-day settlement. So on Wednesdays you get paid triple, but anyways, 71 cents a day. It averages out 71 cents a day. Times 365 days a year. All right, so 260 bucks I'm going to earn just in interest. Divide that by the original $80 in cash that my account is using as margin. 325% yield. Right, Michael. I'm not suggesting anything except you be prepared for 2.6 billion to change hands, and if the USD Mexican peso looks like it's toppish, you should be into it. Okay, and I should probably start getting out. Well, it depends on what your broker pays and what type of your account and all that kind of stuff, right? So if you had, let's say you raised 10 million bucks from friends, family, fools, whatever, and you went to TradersWay or whatever broker, and you're like, hey, I want to open up a high yielding account. I'm going to deposit 10 million in cash. You could negotiate. Yeah, Chuck, I don't like to get out because I like to talk about these things that we put in, right? So to me, it's just for talking points. But yeah, getting out is going to be something that needs to happen soon. But anyways, so going back to this is just a basic little account. The same one, if you open an account just now, boom. It's not like I have anything special, which means some of the pairs are not paying very good swaps and stuff, because it's an account designed for someone that's got like 10,000 bucks, not 10 million. Okay, but if you're a big boy, you're going to be able to negotiate better terms with anybody, right? Walk into a Porsche dealership and say, yeah, I only got 10 million in cash. Oh, right? Walk in a Porsche dealership and you say, I need a sedan, I need an SUV, and I need a sports car. Can you give me a combo package? What do you think the salesman's going to say at the Porsche dealership? Right? Package deals. We love package deals here at Porsche. Right? Yeah. So whatever. I'm just saying it's just normal business, right? So this is not a special account or anything. Turns out Mexican peso doesn't have a good swap. So that's not a carry. But just this Turkish lira one, fantastic swap, right? So I'm looking at that, and of the money I'm actually investing, you have to look at it like that. If I had $80 and I bought some stock, how much money would I make? Well, there's no real answer to that, right? Does it pay dividends? Okay, well, let's say it pays dividends. Then you can calculate the cash flow, right? So I have to choose, do I buy $80 in a stock and hope the hell it goes up and collect some dividends and move my stock to break even? Okay, so how much am I going to collect in dividends? Chuck says $6. Great. Right? And then I do the same thing. I can buy with $80, right? I can buy $10,000 worth of the Turkish lira. So do I want to own $80 of a stock, or do I want to own $10,000 in Turkish lira? Well, I don't know, so let's do the calculations. Well, the stock, I don't know if it's going to go up or down. Let's just assume I'm using some sort of technical analysis to buy its support. I think it's going to go up, and I have the ability to move my stock or my cost break even. So what can I count on? Well, I can count on earning the 6% in dividends on my $80. It's not a lot of money. But even percentage-wise, 6%. Well, compared to a lot of other things, that's great for a bond or something, right? I think even 6% is high, but whatever, 6%. Or the $10,000 in Turkish lira I bought is also earning interest, like a dividend payment. And if I hold that for a year, I earn 325%. So both are making assumptions now. The assumption are the stock is not going to rise at all. 1 year later, I get knocked out, and I didn't make a penny on the stock. And the same thing with the Turkish lira. It doesn't have to go up. Let's say it just kind of moves sideways, 10 pips above my entry for a whole year, and then on the 365th day, came down 10 pips, and I got knocked out of break-even, making no money on the pips whatsoever. But I'm like, oh, look, at least I got $280 out of my $80 investment. And Ryan's like, but I'm liquid, and there's all these other great things too, right? And I'm exposed to macroeconomics. The US dollar should weaken if global macroeconomics improve. And as more and more money is searching for higher and higher returns and better investments, people are going to say, well, let's get back into Turkey. It's going to do a deal with the EU and this, that, and the other thing, and blah, 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 blah. And maybe the lira goes up. But in the meantime, I'm just going to collect my 325% a year in interest payments. It's kind of compelling to me. What's the likelihood your stock is going to go, your $80 worth of stock is going to turn into $280? What's the likelihood your stock is going to go up 325% a year? Not many stocks go up 300% a year. Yeah, right? I mean, they just don't, right? So what's your upside on this? You turn your $80 into $110, right? What's the upside on the Turkish lira idea with the same $80? Well, the $80 turns into $280, but the pips get weird because the Turkish lira, locking in 5,000 pips profit, all that weird stuff. But let's say it was a pip was worth the same as a euro dollar or something, right? What's the likelihood after holding a currency for a year that you could be up 1,000 pips over a course of an entire year? Right? Remember, your stop's at break even, so you're not losing in that. It's very possible. Look, pound yen is up 2,000 pips in September, right? Oh, look, I'm still at break even on this thing. Check this out. Just this summer, starting about the middle of August, dare I say the third week of August, we were at 179. Is that right? No, 139. So let's just, yeah, 139. And it rallied up before, it looks like the middle of September. Why does it do that? Come on. To 152. So it went from 140 to 150. So 1,200 pips in a month. It's pretty reasonable to go up 1,000 pips in a year, maybe. I don't know. It's your call. But the pips are worth way, 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 way more than the interest payments, right? So now look at the opportunity. This is why I'm a currency trader, by the way. And the taxation in the United States is way better than stocks. And if I lose money in Forex, it's way better than losing money in the stock market based on wash rules and stuff. Forex is way better, right? But anyways, thinking about the interest payment being 300 or more than 300%, plus if I'm up 1,000, it's worth way more than that, right? So we're looking at, I could be up 1,000% on my 80 bucks. So you're like, Wayne, it's only 80 bucks, bro, right? And then you're going to heckle me. You know, I must live in a tiki hut. Oh, actually, that sounds good. Wayne, you live in a ghetto, you're poor because you don't drive a car, you're poor, you only have one TV. Yeah, okay, man, you're right. So, amazing, though, that all these things are so beneficial, right? What if you put in one standard lot? Still not a lot of money. 10 standard lots starts to add up now, right? But I would have to have $8,000. $8,000 in real money. It starts to add up really quickly. Right? You're making $70 a day on an $8,000 investment, and we're not even counting pips. 80,000. Now, okay, but 80,000 gets me what? Yeah, so for instance, like I can, you know, it starts really adding up, right? Because remember, if you do get the 1,000 pips, meaning like it actually rallies that year, plus your interest payments, what if you actually made 1,000? Well, what's 1,000% on 80,000? How do I shut that up? So how much money do you need in the market then? Maybe it's not 80,000. So what's 1,000% on 8,000? I mean, all of a sudden, dude, play with the numbers. I'm just trying to show you the possibilities. Right? Remember, was it 2 days ago? I was talking about John Taylor, the very first Forex hedge fund manager. He was paying himself, not the company, he was paying himself $250 million a year. And his firm that eventually had hundreds of employees, well, I don't know hundreds, but a lot of employees. You know, they had insurance companies, they had retirement funds for like school teachers in the state of California, you know, that kind of stuff. And those were his clients, right? But he never even tried to make a pip. Didn't even try. It was all about like, don't lose pips. Collect, right? Collect the interest payments. Well, there's one example that's available to you now. So what do we need for that Turkish lira to work? Well, look, I never talked about these currencies because I focus so much on the majors and the yens and the dollar pairs and stuff. I'm just trying to open up the world here that you can have exotic pairs if you manage it like a product or a portfolio. You could go to TradersWay, open up another account, and consider that your exotics account, right? Put $1,000 into that, and over the course of time, slowly add to just a Turkish lira position. Just slowly. Once a week, look at it. Obviously, if you're selling USD Turkish lira, I don't think I have any even, right? So if you are selling USD Turkish lira, you know what you're doing. You're selling. You know that you sell at resistance. And the thing that should move this in your favor is simply global macroeconomics. The idea that American firms are going to invest abroad, or foreign firms that have invested in the United States over the last 10 years for its safety have decided to return their money and repatriate it back home. That just simply weakens the dollar. That's just a global macroeconomic play. Just that alone. And then, well, where's that money going to go? Well, there's this idea that poor countries expand faster than developed countries, right? It's called the catch-up theory. Because, and we talked about this one time where it comes from productivity. Okay, you have someone that has no machines, 1 machine, 2 machine, 3 machine, right? There's no machines, digging dirt with his hands. You give the guy a shovel, and his productivity, this is productivity 1, how many units of productivity this person's producing, right? So digging by hand, very, very poor productivity. Give the guy a shovel, boom, productivity goes there. Give the guy a tractor, boom. Give the guy 2 tractors, boom. 3 tractors, boom. 4 tractors, boom, per tractor, right? All of a sudden you're like, and then right? There's a diminishing return. Okay? So a country with very little is going to have returns like this, right? Very steep, sharp returns from investment. You bought the guy a shovel, he doubled his production. Give a guy a tractor, he went up 500%. It was a stupid tractor, right? That kind of thing. But he used to dig with his hands, right? So obviously, right? But if all farmers, let's say, had tractors, adding a tractor that produces 10% more is going to, it doesn't change things versus someone that's plowing a field with a mule, right? So anyways, so I'm just kind of thinking, like, as an investor, if the U.S. stock market's at an all-time high, where am I going to get my better returns? And that's how a global investor thinks. Well, there's a diminishing return to adding more and more money into the U.S. stock market. And in fact, that could be more and more riskier. So why don't I start looking for cheap companies in Europe, right? Why don't I look at emerging markets? Why don't I look at Turkey and Vietnam or something, right? And that's what's happening. This is what hedge fund managers do. This is what portfolio managers do. And that's why the dollar will tend to weaken. Well, if they're bringing their money back, if foreign countries are bringing their money back, or even better, if U.S. investors are looking to push the money, I need to be where they're pushing it before they push it. So if Europe suddenly starts to feel better, Europe's done a lot has invested a lot into Turkey. And then when everything collapsed, it all disappeared. I think when things start improving there, maybe not this year, maybe not even next year, but in 5 years they might start saying, all right, let's start pushing more money back into Turkey. It's a big market, it opens things up, things in the Middle East will come down, and I don't know, whatever. Maybe I just like the 325% yield. I'm a yield hog. Well, I'm trying to get, there's two questions here. Wayne, still new here. So if it bounces off weekly central pivot and is almost weekly M4, what should I look for next? Well, a weekly M4 is the conservative target, and weekly R2 is the aggressive target. So if you're heading up, if you're almost to the target, the projected top for the week, and you're a bull, and tomorrow we have the biggest news event, aka risk, to that profitable position, you'll have to decide how you want to manage that risk. You're near the projected top, and you have a risk event tomorrow. And then ask yourself, Katie, if it was a $2 million position of your cash, so you're loaded up $200 million in the position, how would you handle that? Would you take the money and run and avoid the risk altogether? Is that how you would manage it? Would you move your stops and hope that maybe NFP goes your way and you skyrocket? And what about the gap risk, all that kind of stuff you would face with non-farm payrolls? Think about it that way. And then one last thing is think about the law of averages. What if you always took profit when you got to the pivot profit zones? Sometimes it rallies right through them, sometimes it doesn't, but what if you just always took profit here, for example, just because it's there? Well, sometimes it'll go a little further, sometimes it just won't do it, right? You don't take profit here and then it comes back, so you take profit there and you've lost this amount. Maybe on the average, if you always got out there, it works out to you make the same amount of money, but you face a lot less risk, and more importantly, a lot less volatility. There's nothing worse than making this money and then watching it go away, and then bailing out here, and then watching it drop again. Well, you could have just gotten out here, and if you average it out, it ends up being the same price with a lot less risk and a lot less. I do this because there used to be a time when I was a trader in my early years, I had like stomach problems all the time from trading. It was very stressful. And so after I went on my business planning retreat and I came back and I looked at how I traded and I made some adjustments, I realized a lot of that stress went away. And I'm like, this is great. I hate pullbacks. I hate them, right? Because that's where I'm like, oh, I should have got out. I should have got out. Please go and please drop again. Please drop again. So I found a way just to avoid that by just handling every situation kind of the same. And if I take profit on a profitable trade and then it takes off and keeps going, well, if it was unpredictable, then it doesn't matter to me. Okay, now going back to the next question. Wayne, when you were still new to Forex and you'd done fundamental analysis and you had a bias and you realized that that I was wrong, okay. Well, that's where technical analysis comes in. So remember, if you're a bull and you're buying at support, it shouldn't be making lower lows. Like if I was a buyer of this pair, where are the possible entries? There's almost none. I mean, here, I guess. Maybe here. So you're like, I just know it's going to go up, but I don't even get a 2155 cross here. Here I do, but okay, so there's a maybe in here as well if I was a bull. Sort of the higher high, higher low. This is the next move. So maybe you buy that. But you know, these things are low frill. I mean, they die quick, right? And then like, ugh. So maybe I buy it here, double bottom, higher high, higher low. I could see that if I was hell bent on doing that. But then that, I mean, almost in minutes collapses. So that's usually how you realize you're wrong. you just don't even get entries, and when you do, they very quickly don't pan out. So the best way is to be a dog about it now and say, well, I need a higher high. And you might just say above this whole area. And then you start looking for dips. Okay. Yeah, neck problems. Yeah, I know that. So if you saw the technicals were not aligned to your fundamentals, that would tell you, well, it just tells you the market's wrong. Right? So you do your analysis. You've seen me do stuff. I can be 3 to 6 months early. I'll tell you, that's my weakness. No, the market's always wrong. You just don't trade against it. Like everyone says, the market's not. No, the market's full of idiots, right? And they're very emotional. So I almost think like the market's always wrong. So I think like I've done my studies and I've done my analysis, right? So bear with me, Michael. I know what you're saying, but the way I kind of look at it is I say, I've done my analysis, I've done my research, and I believe this should go up, but it's falling. So I need to use technical analysis to help me discern when market conditions are favorable to my bias. Right? What Michael's getting to is, a lot of people trade against it and make the market right and all that. No. So I'd rather be in a situation where I've done my analysis and I think the market should be going up. And then I see the rest of the market start to agree with me. That's when I like to start trading. Right? When the market, as Michael says, it's not wrong. Well, how about this? The market hasn't gotten there yet. Right? That's really, you have to wait for the average Joe to catch up and say, oh my God, this should be going the other way. So a lot of people have to take profit. Other people need to take their losses. And it takes a while. It's like training donkeys or something, right? It's slow and stubborn. But then all of a sudden, snap, the market changes the other way. And you have to be in tune to what's happening to say, oh, they figured it out now. Here it comes. Right? So that's why I say things like, look at the trade data. The trade balance data out of Australia is positive, but the Aussie dollar is falling. I remember talking about that specifically. And I'm like, so the market's wrong here. The Aussie dollar shouldn't be falling. It should be going up. So we need to be ready for this. We need to look for the support. We need to look for the reversal patterns. But the market is not aligned with reality. So prepare and observe and watch and analyze and be there, and it happens. Okay? But there are large forces. I believe everything's Newtonian. I believe the Forex market is a giant machine. And it all makes sense. Okay? So when the machine, now what's the machine? Well, if Australia is exporting more than they're importing, then that's going to shift the balance of payments. So, well, what does that mean? Well, they're exporting, so they're sending products abroad, which means they're receiving Aussie dollars. There's demand for Aussie dollars, and once that starts to creep in through the global economy, Aussie dollar will go up with this increased demand for the currency. I think I even drew the damn chart. The increase, shifting the demand curve and all that kind of stuff. I'm like, Aussie dollar's falling, but the market is wrong. So start to prepare. Be there when it happens and get involved. Pretty sure I did all that. If not, maybe I did it for somebody else. Yeah. Although I looked and I'm not sure if the dairy prices were really that positive, but I don't know. So I don't know if we did anything worthy today. I apologize for that. I told you up front, just kind of feeling weird today. But, you know, hopefully these conversations from time to time at least make you happy to be a currency trader. Makes it really interesting, right? I hope. Right? Like, I think that'd be a great gift. If my gift to you is that you can walk through a crowd of friends and family in the holidays, and they're like, how's the Forex thing going? And you're like, oh man, it's awesome. Let me tell you what's going on here. It's really fascinating. Right? And people are like, whoa, dude, you're really getting into this, Sean, right? Look at this, really, wow, what are you talking, you're doing macroeconomics and stuff, and what are you doing? Right? Anyone that's done the fundamentals course, I think it's funny because it starts out really basic. Oh, here's what money is, here's what money isn't, and all that kind of stuff. And this is how it's used for. And then let's start talking about commercial banking. How to manage balance sheets and stuff. You're like, oh, I'm managing a balance sheet as a manager of a bank? Ooh, nah, but to me, I love that stuff. So I remember when I was studying this is my life. I took my kid to a birthday party at a parkour facility. I don't know if you know what a parkour facility is. But if you ask my buddy, that's where you goof off like you're 20 and you break your heel. I'm like, yeah, dude, you're like 45. You don't do parkour. But anyways, so parkour is a thing where kids jump around like Spider-Man, right? And all the dads are sitting around talking to the other dads. All the moms are sitting around talking to the other moms. And I'm in the break room. I got a textbook about that thick that I paid $400 for. And some other guy's like, hey, man, wait, what's going on? What are you reading? Oh, I'm looking at various scenarios of managing the balance sheets of commercial banks. And I remember they're like, what? Yeah, you know, commercial banks. If I was managing a bank, I'm going through various scenarios on how to manage the balance sheet. It's like, whoa, did it just get quiet here? They're like, hey, Jim, hey, what are you doing over there? Oh, wow, I put new wheels on my golf cart. Yeah, but, yeah, it's just funny. Like, I love this stuff. To me, it's not a sacrifice. I mean, you got to do stuff like drag textbooks to parties and stuff. But I love it. I'm like, damn, awesome, right? Yeah, so, hey, Wayne, how's the weather? Where, here? We're in China. Like, what? Yeah, I track the weather all over so I can trade commodities. Yeah, if that typhoon hits China the way I think it will, you watch soybean futures, man. You watch soybeans. I'm telling you, watch the soybeans. And they're like, dude, I don't even know what the hell a soybean is. They're like, yeah, that's why I'm awesome. Right? Yeah. Yeah. So anyways, I love this stuff. I love what I do. I love being a currency trader. I love it. The fact that it just makes sense to me. It's real. It's like business and business cycles. And central banks manage business cycles. So now if you know the business cycle, you know what the central bank's going to do. If the central bank's going to do something, you know how it's going to impact the currency. Okay, that's supply side. But demand side, well, commodities make sense to me too. If the economy is growing, you're going to need energy. If the economy is growing, you're going to need copper. If the economy is growing, you're going to need steel. If the economy is growing, you're going to need French wine. You're going to need soybean meal. You're going to need lipstick. I mean, awesome. This just requires money to move. I love it. I just love it. It's awesome. Ryan, we have an anniversary coming up. Sweet, big hug, man. Big hug. Bring it in, bring it in. Oh, happy 2 years, man. Happy 2 years. Yeah. How awesome is that? All right, well, thank you for being on my team. I really do enjoy our time together. Thank you for being a client to TradersWay. You know what? Oh, call them up or go log into your back office, set up a separate account for Turkish lira trades and see if you can do it. Yeah, Ryan, thanks. I bought something I have never bought before, seafood broth. So we'll see how that goes. I have a feeling I'm going to lose 5 pounds this week. The hard way. So, oh yeah, non-farm payrolls. I'll see you at non-farm payrolls tomorrow. Be nice to have my friends with me. Peace on earth, may the pips be with you, may your profits be above average. Cheers.